Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 11th of December. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. Let's quickly start with an overview of rotations for various market indices, stock market indices. And I have the weekly RRG on the left and the daily RRG on the right. We're using the MSCI All Country World Index ETF as the benchmark for these rotations. And as you know, we're usually looking for confirmation of rotations on both the weekly and the daily, because that gives us the better odds of a move into that direction. And what you can see here is that the images for both the daily and the weekly are quite different. You see some opposite rotations. So I think that indicates the choppiness of the current market, or uncertainty is probably a better word. If you look at the weekly, you can see a ton of indices moving into a negative heading towards the lagging quadrant. And you know, it's got Australia, it's got the UK, it's got the Hang Seng, it's got the CAC, the DAX is just pointing upwards here. You got the Nikkei moving down. And if you look at the dailies, then you can see that, for example, here the Nifty is actually moving higher, the DAX moving higher. You see the FTSE moving higher very clearly. So FTSE moving higher, moving lower here. You see Australia moving higher, moving lower there. You see the stocks index moving higher on the daily, moving lower on the weekly. So that indicates that there is not a real clear path for these markets. Now, where do we have some sort of a confirmation? I think that it's very clearly a confirmation in Hong Kong. So the Hang Seng is rotated. And that's actually one of the stronger rotations when you just roll over inside the improving quadrant and go back to lagging. That indicates a new lag in an already established downtrend. So that's a pretty reliable rotation, if you wish. And we see that the same has happened inside the daily chart. So daily, you see the Hang Seng now really, moving away from that back, really deeper into that lagging quadrant. We see some sort of confirmation with the DAX. You can see on the daily, the DAX is moving into the leading quadrant, and in the weekly, we see that little blue tail here has started to move in a positive direction, so that's a good thing. And if we look at the Dow Jones, that's interesting because you see the Dow here, it's a very short tail. So short tails indicate that there is a level of stableness in the trend. You see these large tails, that indicates that there is power, that the trend is moving. If there are short tails, there is some sort of stability there. And you can see how that same Dow Jones is starting to move up into the leading quadrant on the daily. So that is a good thing. So the Dow Jones and the DAX are two of the markets that I feel are in confirmation with each other. They're in sync and moving in the right direction. If you look at the Nikkei, which is here on the weekly, inside weakening and rapidly moving towards the lagging quadrant, and also here it's inside the lagging quadrant on the daily, but as you can see, it's making one of these little squiggly moves, but it's now starting to head at a negative heading, so it's getting back in sync with that negative rotation on the weekly RRG, making the Nikkei one of the weaker sectors, markets, together with, as I already indicated, the Hang Seng index. So let's have a quick look at those individual charts. Oh, by the way, here's what we usually do, the graph of the same group of markets vis-a-vis 0%, so it becomes a price trend indicator, and you can see how the Hang Seng has moved into the lagging quadrant, so that's now a confirmed downtrend. And you can see that a ton of these markets, so the FANG, the NASDAQ, the Nikkei, the S&P, CAC, FTSE, stocks, they're all rolling over, so they're at least going into a pause in their current trends. The ones that are outliers, probably the Nifty, that's still going pretty strong. Now, back to the individual charts. If you look at the Nikkei index, then you can see how that is a negative rotation. It has tried to break resistance, didn't work. Actually, 1, 2, 3, 4, 5, 6, I don't know. It depends a little bit on whether you count this as 1 or 2 tries. I'm inclined to say it's 1, but what's more important is that it has completed a double top formation here right against that resistance, and we're breaking lower. We're actually going below the gap area right now, and that opens up the way for more downside. I'd say that the target here is probably 30,600 for the Nikkei in the near term. Doesn't say much about the weekly trend, but in the near term it looks as if we need to digest or pause a little bit of that move that we had from, this was late October, to where we currently are. If you look at the relative strength lines, the RRG lines, they're clearly moving over and both moving below 100. If you look at the Hang Seng Index, it's a little further ahead into the process, I think. The chart is quite different because the Hang Seng, if you see this chart here, is clearly in a price downtrend for a long time already. Quite similar with the relative trend. As long as the red RS ratio line is below 100, we say that it is in a relative downtrend. And apart from 2 small hiccups here in August and again recently in October, this is now very clearly in a relative downtrend, and it's getting more fuel, it's getting an acceleration after breaking below this support area. So where can it go? I think that the low that is set in October 2022 is a very likely potential target for the Hang Seng Index. We move to the more positive side of things, and we've got the Dow Jones Index here. You see a very nice gap above the previous high, so that is a good sign. If you look at, we're not at all-time high levels, they're slightly higher here, but you know, it is a good thing, and the gap area there is definitely strong. The problem, quote unquote, is that after such a rally, it is not uncommon for a little bit of a setback. Big difference is that the setback in an index like the Dow Jones is likely to find support at the gap area, which coincides in this case with the previous high, so it's a pretty strong support area around 35,500, 600. And if we indeed will see a little bit of a setback in the Dow in the next coming days or weeks, I wouldn't be surprised if it drops back into the gap area, maybe go back to that lower end, to that previous high, which is now expected to act as support, put in a new low there and start continuing higher. From a relative perspective, it is definitely one of the better markets if you compare it to, for example, the Nikkei and the Hang Seng, which we just saw. If we do the same exercise with the German DAX index, you can see that this also broke to a high level, broke above the previous peak. This is actually breaking to new all-time highs, or it broke to new all-time highs already, making it one of the stronger markets. And here also, the fact that it broke to new highs makes the downside risk limited, whereas we saw in the Nikkei and the Hang Seng that there is quite a bit of downside risk. I think that for the Dow and now for the DAX, the downside is quite limited, and that causes these RRG lines to pick up and show strength. If you're into pair trading or long short positions, etc., try looking for the markets that are showing strong relative strength for your long positions, and if you're for your short positions, you go looking for the markets with weak relative strength. That way you get some market agnostic, or at least to the agnostic to the general direction of the market, possible trading ideas. When we take a look at the New York FANG index, the New York FANG universe of individual stocks, we see the RRGs on the weekly and the daily scale, and there's a bit of a similarity to the markets that we just saw. Not a lot of confirmations, and if you would look at these stocks outright in terms of trends, they're all rolling over. They're all kind of at the end of a move. So for outright long positions in the FANG or the MAC 7 or whatever people call it, I would say that is a bit of a dangerous operation right now, because we are running against resistance levels. Doesn't mean that we can't get some nice trading ideas from a market agnostic perspective. And that's where RRG comes in. If we look at the RRGs here and we look at the individual rotations, the individual tails, what I'm trying to look for is tails that are moving in sync, that are moving together. And one of the tails, if I start on the weekly, one of the tails that catch my eyes is the Tesla tail. Big red tail, indicating a lot of strength, and it's on a negative direction, on a negative heading. So where is Tesla on the daily? It's inside leading, but has rolled over already. So it moved in there and almost immediately when it hit the leading quadrant, started to roll over. This is the end of a relative move where the longer term trend is clearly lower. So that's a chart, that's a stock that I want to inspect the price chart of, potentially looking for short positions. Another one which has gone through a magnificent ride is obviously Nvidia. And if you look at the weekly tail, it's inside the weakening quadrant, but it's now starting to move to the left, to the lagging quadrant, meaning that it is starting to lose relative strength. And if you look at the daily version, it's in a similar trajectory. It's in the as well in the weakening quadrant on the daily chart, and also moving to the left. So I'm also interested in looking at that chart on a price chart. Now, what can we find from a more positive perspective? If you look at the tails here inside weakening, because you know that when a tail is inside weakening and it starts to curl up without hitting the lagging quadrant and potentially moving back towards leading, that's usually a very strong sign. And that's happening with Amazon. If you look at the tail of Amazon here on that weekly chart, you can see how it came through leading and then moved into weakening and is now starting to move back up again. Now, if I look at the tail of Amazon on the daily, that's right here, then you can see quite a similar trajectory. It moved from leading into weakening, and it just hit the lagging quadrant, but moved up, starting to move up, and is now like, it's in the center of the chart, but moving higher in terms of relative momentum with that move there. So I'm going to take a look at Amazon coming from a positive perspective, because I do think that it's actually moving into the right direction. And the second stock that does that is Apple. If you look at the tail of Apple, it's right here on the daily, but it's right here on the weekly. So both are moving in the same direction. They're both moving in that northeastern direction that we like so much. If you look at a compass, it's between 0 and 90 degrees. So these are very interesting tails. And then the third one that I want to put your attention to is Snowflake. If you look at Snowflake here, it's coming from a very low position in terms of relative strength. It's moved through improving, it's still there, but it's now starting to pick up. And you can see how the distance between the nodes here is increasing. And that's a good thing. It means that there is a pickup of the pace. And that is very well indicated on the daily tail of the RRG, where you can see Snowflake basically being the strongest stock in this universe at the highest RS ratio level and the highest RS momentum level. So that's another stock that I would like to bring the chart of. So let's do that right away. Starting with the negative Nancy's. So here's Nvidia. After that massive rally that you can see here, we're now in this very broad consolidation. We tried to break higher, that didn't work, and we completed this double top formation here, and we're now on the way lower. We could go back up slightly, maybe test that former support level as resistance. That's around let's say 480. But what's more important, at least in my mind, is the rollover in terms of relative strength against the other stocks in this group, against the New York FANG index. Nvidia has now rolled over and is now in a relative downtrend, making it one of the lesser attractive stocks inside the New York FANG. And the same goes for Tesla. If you look at the move, Tesla obviously broke from this move here with a big gap. We kind of closed this gap area, but you can see how a new falling trend line has formed. So it's got 3 touch points already, making it a reliable trend line, and we're trying to put in a 4th high against that trend line. So it's becoming a bit more of a resistance level, and as you can see here, this area around 245, 1, 2, 3, here we got a little bit of a peak higher, is now clearly a resistance area as well. So we've got a double resistance in this area around 240, 245. If that means a top is being formed there, and you can see a break lower at the shorter time frames, combine that with the rolling over situation in terms of relative strength, making Tesla an interesting stock to watch from for lower prices, because within this falling trend channel, it's now at the top. There is a lot of room for a decline for Tesla within this falling trend channel. If we go to the other side of the equation, which is the more positive side, and you look at Amazon, you can see how after the rally, Amazon is now in a consolidation pattern, a consolidation formation. Looks a little bit like a triangle. And you can see how that is taking shape at a pretty serious resistance area. So it's between, let's say, 140 and 145, 146. I stopped, I had that trend line, this trend line here, I had that on my chart, but I kind of took that out of it because it runs right through the middle, indicating that, and it's a good example that, you know, support and resistance levels are almost never a very clearly defined number. They're more like, I see them more as ranges or areas, and I think that is a very clear indication that the resistance area for Amazon here is around, you know, this is 143.5 and this is almost 146. So this area here is clearly a resistance area. So the market is battling to overcome that resistance right now. The good news is that within these consolidation formations, you can get a clear signal. So if we break away from this triangle, it's a clear positive sign. If we break away from this triangle on the downside, it's a clear negative sign. If I have to make a bet on this, and I look at the relative strength and the rotation on the RRG, my opinion is that the odds for it to break away to the upside are higher than breaking away to the downside. But even if you break away to the downside, it's probably going to go down less fast than the other stocks in this New York FANG index, or for that matter, the New York FANG index itself. If we look at Apple, that's also in the positive boat, so to say. You can see how Apple has just broke away from a little consolidation here, and this really looks like a bullish flag pattern, and it ticks all the boxes that it needs to tick to be confirmed as such. So you got a long uptrend. You got a small consolidation of about 2-3 weeks. That's what Edwards and McGee say in their book as the qualification for a bullish flag. And then you break away with a strong move. And that's exactly what happened a couple of days ago. The only caveat, because usually what it tells you is that usually flags occur halfway a move. And that would be really strong, because it would mean that you got like 165 to, let's say, 190, that's 25 US dollars, and you can project that move. If it's halfway, you can project that move from the breakout level. That would put us a target at 215. The only problem is that we've got this overhead resistance coming from the July highs here. So at least the upside is towards the July highs, that's just below 200. But if it gives way, then you can start adding the projection from that bull flag pattern and see Apple moving to new all-time highs, which would be really positive, not just for Apple, but for the market as a whole. So I'm definitely going to keep an eye on those levels for Apple, and especially see whether it can break that 197, let's say $200 barrier, because there's definitely a bit of resistance there. The RRG lines are absolutely supportive for such a move. And then finally, I'd like to take a look at Snowflake. It's not one of the most popular stocks in the FANG, but it's a very interesting one. And what you can see here is that it has been moving in a sideways range. It went, like all the others, through a very massive rally, a ton of gaps higher. And it's now consolidating just below that resistance area. But look at the relative strength, how strong that relative strength is compared to the others. And the reason for that is, and we need to zoom out of this chart, is that Snowflake is nowhere near its highs. If you look at Meta, Nvidia, what else did we look at? Apple, they're all against their highs. Snowflake isn't like that. It's still in a long consolidation pattern after a big decline, and it looks as if we're ready to break out here. And this is a massive consolidation range. So when Snowflake, and look at the relative strength, so the relative strength is actually really preparing for a move higher, at least in terms of relative strength. So if Snowflake can take out this high here, it's just 192.5, and then you got this flimmer of resistance here a little bit further back, but I hope that you agree with me that as soon as it's starting to break 193, let's say 195, we're already well underway, and then this is going to be a minor resistance area, and that could make Snowflake one of the more interesting stocks inside the New York FANG index. I'm going to leave it at this for this weekly update by RRG Research. Thank you for watching, and I hope you enjoyed the show. I would love to see you back next week at a new update by RRG Research. Same time, same place.